Regulating crypto, the case against crypto ATMs. The kiosk at this corner store gas station along Highway 101 in California's rocky central coast informs you that you're on your own. The workers at this shop cannot assist you with this machine. The kiosk is located next to a standard cash withdrawal ATM with an identical keypad and slot for a plastic card. But it's bigger and glitzier, with a vividly colored screen like a casino slot machine. It takes your money and transforms it into Bitcoin in a virtual wallet. In today's video, we take a deep dive into the world of cryptocurrency. Our focus this time is on Bitcoin ATMs and what exactly the government has against them. So get your favorite drink, sit tight, and enjoy the ride. Remember to go clickety-clack on the like button and do a tap dance on the notification bell so that you get to know immediately when we release videos on the channel. Welcome to the world of cryptocurrency ATMs, sometimes known as BTMs, with the B standing for Bitcoin, which have proliferated in recent years despite the fact that most people have no idea what they're for. The specific number of these machines in the United States appears to vary depending on who's counting, but most estimates place the figure at around 34,000. That equates to roughly 90% of the global total of these, with Canada coming in second with an estimated 2,500. Crypto enthusiasts and companies regard the devices as an extension of the promise conveyed by Bitcoin, the largest cryptocurrency, another step forward towards financial democratization. Everyone understands what an ATM is, and by allowing individuals to buy cryptocurrency with cash opens up a new era of exchange and investing to anyone. You can't invest in Wall Street without a bank account and brokerage account. BTMs allow hourly workers on their lunch break to buy cryptocurrency instead of a lottery ticket. However, as they have grown, state regulators across the country, as well as some federal officials, have begun to express some worry. Most of these machines are operated by legitimate businesses, however, some are put up by unlicensed operators. Regulators are concerned that crypto ATMs may serve the interests of money launderers and fraudsters too cleanly, or that they may conceal payments to sex and drug traffickers. Even for honest brokers, their fees are significantly greater than standard bank transactions. They also sell themselves aggressively to low-income persons who may be unaware of the risks in converting their money into cryptocurrency, which is currently in the middle of one of its intermittent crashes. States are attempting to figure out how to deal with these machines at a time when they are still debating on what to do about crypto. In most states, banking officials are in charge of determining policies. Furthermore, most jurisdictions have not yet officially established that digital money transfers require the same type of money transmitting licenses that control traditional finance. As a result, clients confront a hodgepodge of safeguards while crypto companies face their own uncertainty. And as each state has its own powers and its own right to make its own laws, it becomes difficult for companies to know where to open up. Some federal and international concern has already been expressed about the devices. The U.S. Government Accountability Office told Congress in a February study on the use of virtual money and trafficking that the machines can aid and abet in multinational cartels and urged that the government authorities, including the IRS, increase their monitoring. Singapore, recently labeled the world's leading crypto economy, outright banned them in January, claiming that the market encouraged customers to trade on impulse. Britain's regulators shut down the country's 81 BTMs in March, a move that may or may not have been permanent. In the United States, New York has been particularly harsh on cryptocurrency ATMs, which is not surprising in a state loaded with financial authorities. California, which is frequently at the forefront of innovative technology, has failed to come up with a proper regulatory scheme. Alabama, where the machines arrived rather late and where the state government has begun the process where BTMs will have to adhere to money transmitter rules, is one of the most aggressive states on crypto policy in general and now on BTMs. As the popularity of Bitcoin ATMs grow, they are becoming the focus of many large, difficult-to-answer concerns that surround cryptocurrency itself. Are they a godsend to individuals who don't have regular bank accounts, or are they an age-old financial predator hidden behind some slick new screen? Is it the responsibility of a regulator to say? And does the fact that these new machines are a valuable tool for criminals as well as a fresh source of pain for law enforcement drown out that question entirely? So what exactly are BTMs for? Now, that depends on who you ask. One area that the sector has highlighted is remittances, which are funds that immigrants send back to their family and friends in their home country. BTMs are concentrated in Salvadorian, Colombian, and Mexican communities in large cities such as Miami, Dallas-Fort Worth, and Los Angeles. The company that installed the first ever Bitcoin ATM in the United States, in Austin, eventually renamed itself as a remittance provider before closing down. BTM companies who install the devices and provide customers with virtual wallets also promote themselves as providing customers with a new type of alternative investment. Outside of the financial system, crypto has been long popular with Americans, particularly lower income ones. Not all that glitters is gold though. Detractors argue that the underlying motivation for these computers is their anonymity. Because most crypto kiosks do not have to follow the same uniform know your customer requirements that banks do, they're useful for anyone who needs to transmit money in an off-the-radar transaction for whatever reason. A few prosecutions have already resulted from potential criminal use. A Southern California man pled guilty in 2020 to running a $25 million illegal cryptocurrency company, including BTMs, for criminal clientele. In indicting a man in April for operating dozens of unauthorized machines, Manhattan District Attorney Alvin Bragg stated that the owner, quote, went to considerable measures to keep his Bitcoin kiosk company a secret in order to attract customers who require anonymity. BTMs, like many financial services geared towards the unbanked, have substantially greater fees than their establishment equivalents. Typical kiosk commissions for cryptocurrency purchases began at 6.5% per transaction, and they can reach all the way up to 20%, fees being lower if you simply withdraw money from your cryptocurrency wallet. The BTM business denies that the kiosks prey on the poor, while some corporations admit that the attraction for criminals is a problem that must be addressed. Some businesses are attempting to differentiate themselves by implementing stricter security requirements and aggressive anti-fraud procedures. In general, the industry maintains that the machines provide required convenience, speed, and secrecy. That what appears to be targeting impoverished people is a vital component of cryptocurrency's democratization of finance, providing a simple route for individuals who might not otherwise have the opportunity to invest. Crypto may seem terrifying, and the world of online crypto exchange may appear confusing or daunting, yet everyone recognizes an ATM. A BTM is a solid, well-known reduction of a theoretical intricacy in the blockchain or Web3 money into something that everyone can understand. Much of the oversight landscape has followed anticipated lines as ATMs have spread. In 2015, New York, the capital of traditional banking and financial regulation, issued a stringent BIT license for all virtual cryptocurrency exchanges. CoinSource received the first such license given to a BTM in 2018. Wyoming and Florida, on the other hand, are among the most relaxed, trying to attract the business to their states, with Miami transforming itself into a sort of crypto Wall Street. There are several others in the middle, such as California. Despite its regulation as a consumer protection hotspot, the state has provided one of the easiest regulatory regimes to date. Governor Gavin Newsom signed a crypto-friendly executive order in late spring in an effort to attract more business. However, the state legislature recommended a major increase in overall control of cryptocurrency markets in the last month, with a final vote scheduled for August. Alabama, a business-friendly red state, is taking a firm stance, with its security commissioner, Joseph Borg, emerging as a crypto hawk, particularly when it comes to hunting down and prosecuting digital money crime. Alabama rose to prominence not because Bitcoin ATMs arrived first, but because they arrived late. With a population of less than 5 million people, Alabama was one of the last states to see BTMs arrive. According to Borg, they are now largely concentrated in popular beach areas and high-tech neighborhoods. Borg, unlike every other state financial regulator, has criminal enforcement authority due to a peculiarity in Alabama's securities legislation. He says he became interested in BTMs while working to identify crypto-related scams in his state. When BTMs began to arrive, their potential misuse for money laundering, terrorism, and the like struck him as a law enforcement issue, and he immediately began thinking about how he could put some safeguards in place. Were these machines adhering to the standards that banks follow, which require them to check that customers are genuine persons who are legally and financially suitable to do business with? Were they covered by insurance? Did their operators have financial business license, or were they subletting the kiosk to those who did? Could money mules of the past, in which an innocent person is paid unlawful money transfers on behalf of an anonymous criminal, be recruited as crypto mules without their knowledge? In Borg's words, quote, "We do need to know what's going on in our state. We don't want the BTM machines used for illegal practices, and we don't want local people getting roped into doing anything illegal." Borg said the kiosks serve legal objections that he is not attempting to shut them down. He's now working on rules to require BTM companies to obtain money transmitter licenses. Quote, "We want to do things correctly the first time," he explains. "I don't think crypto is going away." On a national level, crypto ATMs are subject to oversight. They're governed by the Bank Secrecy Act, a federal anti-money laundering regulation. Operators must join the Treasury Department's Financial Crimes Enforcement Network and report suspected transactions to federal agents. However, there is plenty of leeway. Large federal agencies can only move so quickly according to opponents in some state regulators. Because of the vast number of BTMs, government administrators have no idea what's going on everywhere. Criminal activities can be difficult to track down, especially when it's carried out via unregistered computers. As the GAO noted, earlier this year, officials simply do not track what happens at individual devices, and the government agency in charge does not force operators to reveal the locations of their equipment. Concerned about prospective crackdown and its reputation, the sector has begun to defend itself. A collection of BTM companies has formed a cryptocurrency compliance cooperative, establishing ground rules such as requiring clients to use ID, posting consumer warnings about potential frauds on their machines, and more. Seth Sattler, Chief Compliance Officer for crypto ATM provider Digital Mint, serves as the cooperative's executive director. He sees the industry's difficulties as growing pains that can be addressed by the corporations themselves. In his words, quote, "Anytime there is an emerging technology that has a large-scale amount of publicity but not a large-scale amount of controls in place, it's going to be potentially exploited by scammers and nefarious individuals." Sattler claims that his fraud team at Digital Mint has returned $6 million in cash to potential victims of romantic criminals who misled them into donating crypto via dating apps. Customers are guided through fraud detection questionnaires by the company's machines. "Not all Bitcoin ATMs are created equal," said Brian Reisbach, Chief Compliance Officer at CoinMe, a cryptocurrency cash exchange that leases its machines from Coinstar. Reisbach supports New York's harsh stance on cryptocurrency licensing. He considers the state's BIT license to be the gold standard of regulation, preferring it to California's far broader laws in which, quote, "you're lumped in with other money services like the Western Union." He argues that greater regulation that keeps out bad actors is ultimately beneficial for the sector since it protects consumers from being taken advantage of, making them less likely to return to a BTM. However, he's an oddity in an industry that regards the BIT license as an impediment to business, a pricey pass to join a club with a low barrier to entrance. The federal government is beginning to push regulators to be more accountable. The GAO admitted earlier this year in an analysis that the US regulatory regime for BTMs is replete with vulnerabilities. The 83-page paper went into all the ways criminals exploit Bitcoin, especially BTMs, and advocated for stricter regulations. However, other industry-affiliated lawyers and analysts argue that before regulators regulate, they must first determine what they are attempting to regulate for. They demand proof that the rules are ultimately beneficial to the average consumer. Quote, "We also need to be mindful that these regimes can work against the interests of the people we're trying to advance," said a lawyer who consults with a wide range of new financial startups, including cryptocurrency companies, and he has to remain anonymous in order to avoid antagonizing regulators. He argued that BTMs can provide something absolutely unique in the world of finance, an investment that can be obtained anywhere via a kiosk. Irrespective of what crypto observers think about BTMs, one thing is certain: stricter regulations do make a difference. According to research published in Towards Data Science last year, New York's BIT license has slowed the development of these machines. According to the research, the state should roughly have 635 machines in total based on its population size. However, there were just 113 cryptocurrency ATMs in New York. Whether this is good or bad depends on your perspective on how simple it should be to buy cryptocurrency. So, how simple should it be to buy cryptocurrencies? Drop your answers in the comment section below. And that's it for today's video, guys. If you stayed until this point, you must have enjoyed watching the video. Go ahead and give the video a like and drop a comment in the comment section below. Also, remember to subscribe to our channel and hit the notification bell so that you don't miss out on any of the action. And until next time, have a productive week.